It is with great pleasure that have Jeff Lutz, the co-host of Good News Wednesday, back with me. How you doing, Jeff?
Good evening. How are you doing? Great. Very great.
You just told me that it's 40 where you are and you're wearing short sleeves. It's 75 where I am. And look at me. This is kind of a weird situation. I don't know what's going on.
It's all calibration.
It's all calibration. What we're
We're
used
all
to,
Yep. Yep.
Well, we've had a pretty exciting 24 hours. And I think one of the most exciting parts of the last 24 hours is with all the negative things, we can still celebrate Good News Wednesday because Tesla was in the green for a while today, was going counter to the market,
Yeah.
was outperforming everything, including the entire Magnificent Seven when Powell started speaking. But even in the after hours, it is going back towards the green again. So anyway, we'll look at the actual numbers at the end and see where we are then. But pretty shocking that we could recover after all of that.
Yeah. I mean, I think it was a lot more noise than I think when you really got to the signal of the situation, you realize that Elon probably knew this for a while. The board probably had known this for some period of time. And you would hope they're working on a solution. Elon's posts on X were more constructive in terms of like getting to, where do you incorporate Tesla, for example? Like these are all constructive things. These aren't like, hey, I don't need this, I'm done. So plenty more work to do at Tesla. I think just want to figure out how to move past this. I think there's a path forward. It's just really about executing.
Yeah. So with regard to the decision, I know it's been batted around and I've been batting it around for 24 hours, but I just, Jeff, I feel as if this woman was biased. I feel that when I see, you may know I have a law education. I have a law degree from UCLA. Have never practiced. I never took the bar. I'm not allowed to give legal advice. So this is not legal advice. But when I see a judge who comes down 100% in favor of the plaintiff across the board, that every single facet, she goes through the entire decision, there's never a time when she says, the board did it right, or Elon did it right, or this board member, they should be held out as one that gave the right example. Nothing. 100% of everything went in favor of the plaintiff.
Yeah, I mean, you kind of have to look at the facts as they are, and just try to paint. Just that's a perfect example you gave, or just the other examples of like how many of us didn't know as shareholders that Kimball Musk is not related to Elon Musk? Probably none of us. And so yeah, I mean, somebody brought. It's interesting in this country. I mean, I think I respect our legal system. I think we have a great legal system. It's just you have to wonder, something like this, did the shareholders ultimately benefit from the outcome of this case? It could cause greater harm to the company than it actually helped. I can't figure out actually where it did help. And what kind of precedence does this set for capitalism? Do people want to incorporate, in this country, in that state, knowing that, they could have a compensation package, have something planned out, have broad agreement on it, have, all of your shareholders, the people that ultimately should have a vote in this, overwhelmingly approve it. And then you do the work, you hit the milestones, and 6 years later it gets yanked from you. It almost seems, again, unless there was something, egregious, there was something completely, underhanded and, evil that was uncovered. That's one thing, but that just doesn't seem to be the case. So to have it yanked from you, it almost seems, anti-capitalistic, un-American. And yeah, the legal opinion had a lot of like, never before kind of like, it was kind of like it was trying to like build it up, almost like it was a production
Yeah.
of sorts, and really build up the drama in the write-up. And I don't know, you want to just take the facts on their face and just hope that there's this activism, is this trying to get to another place in a political career, or you just take it on the face of, of what it is. Again, nobody should be, you know, you know, nobody should be like trying to like, oh, this, judge, nobody should be trying to harm anyone or do anything like that. Just more of like on its face, like feels like there's some amount of activism that should be involved, peaceful activism, and whether it's, a vote of some or something to just like, where do we go from here? Like,
Yeah.
and how, I think it's just more of like, how do we get to the next spot? Um, in a very productive way, very quickly.
But I want to just for a minute look at a couple of the on the merits aspects of it, which I don't think have been fully thought through. How can a compensation package that is contingent, it's a contingency, is contingent upon goals being reached that are seen by everyone, including the New York Times and everybody else that had an opinion on it, as impossible to achieve, be unfair to the company or the stockholders? It would seem like this would be on its face, as we say in the law, it would be on its face impossible to be unfair if everyone who looked at it said it was impossible to reach.
Right. Doesn't pass the common sense test. Also, what is this trying to get into the minds of tens of thousands of shareholders and trying to understand what they knew or what they didn't know? What they knew is what the compensation plan was. It was written, it was documented, it was available to read. So to me, it's that plan, it's the milestones, it's the understanding of it, and it's the voting on it. Where somebody went to dinner with who, to me, that's not as important. If I didn't see the plan and I was just like, Elon's getting a compensation plan, it's milestone based, and, just, vote on it because, he should be the CEO. That's one thing. But, that plan was published, documented, was written about, like you said, by the New York Times, reviewed on multiple TV shows. There were economists involved. There were, professors involved in crafting this. And again, like we saw the plan. It's not like we didn't see the plan. So I honestly, I'm indifferent in terms of the relationships thing. Maybe something for the company to deal with in terms of as each director comes up for a vote, that's how it's dealt with. Okay. But in terms of like this situation, having a documented compensation plan, as you said, with milestones that were very difficult to 10x the company and to do it ahead of plan, it just, again, it feels anti-capitalistic, un-American that, this is not resolved in a way that, where the parties are kind of unaffected.
There's been an awful lot of conversation, Jeff, about whether or not this should be appealed. I think it has to be appealed, not just because Elon, I think you may have mentioned on another program on Brighter with Herbert, that they should appeal it, or maybe it wasn't you, but anyway, somebody said they need to appeal it because Elon, he wants to see truth, he wants to see justice in the American way, and he needs to appeal it just for that reason and for the precedent. But on a practical level, you need to appeal it just so we don't have to pay the legal fees.
Yeah, but both are true. I think it's get to the new plan, make sure it's, all encompassing, make sure it's, it's great for the company, it's great for Elon, it's great for the shareholders, and get to the new plan quickly. Get that in, get it going. Make sure if there's anything obvious that was in these findings in this 200 and whatever page report, make sure, the company is protected, the shareholders are protected. Elon is protected when you're crafting the new plan, but get to the new plan. And I would appeal this. You can't let this type of, decision lie. So I would appeal it.
Gary Black and others have suggested that we could take this plan back to the shareholders as is, with some minor adjustments, but with a very clear-cut statement about how it was arrived at, who the board is, et cetera, et cetera. Just take it back as it is and have the minority shareholders vote again. And if they passed it, it would seem like, again, just using my legal brain, not my understanding of securities law, and certainly not my understanding of securities law in the state of Delaware, but just my practical brain tells me that seems like I couldn't find a hole in that idea.
No, I mean, it's logical, but it really, he needs to, this is the conversation we're having, should he have a new compensation plan going forward? Elon's an asset that has a value in the marketplace. He's got a self value of himself. Like, where should I be spending my time if I'm Elon? Should I be at Neuralink, for this amazing cause and what they're trying to drive and do? Should I be at XAI, plotting out the future and executing on the future of AI? Or should I, how much time at SpaceX? He's got all these different options where they're trying to pull from him and take him off the market. And there's some compensation plan tied to all of those different things. So Tesla needs to compete, for his time and to make sure that they have enough of it to execute on their goals. So that's why tying the milestones
Mhm.
to it's all self-fulfilling. So I mean, I'm okay with the suggestion from Gary, but I'd rather just focus on getting the new plan that ties him up going forward in a meaningful way that works for him and the shareholders and the company.
Yeah,
Um,
my theory would be to put them both out at the same time. So
you could,
you're going to have your stockholders meeting. I mean, I'm sorry, you're going to have your stockholders shareholders meeting. After that, you could have the vote, and you could be voting on both plans. You could be voting on reinstating the previous plan as well as instituting the new plan. And
yeah,
I'm not as
yeah,
worried as some that it's going to be so hard to constitute a new plan. I think that even the errors that she points out are correctable, even with a really monster plan. It's just that if it's a really monster plan, I think that she finally came down. If my understanding, looking at the total picture, you could say it was fair on its face, and you would never have to address anything else. But if you decide that it might not be fair on its face, now you have to look at how was it arrived at. That was her second step. Once you've looked at how it was arrived at, you go, boy, I don't like the way it was arrived at in terms of the board, how much time they spent, how deeply they went, how much real negotiation took place. Those were the things that she considered. And she said, all of that was wrong, that it was egregious to begin with, and everything that the board did was wrong. Well, okay, if all that's true, she says you could still take it to the minority shareholders, but that when they did that, the minority shareholders were not properly informed. So I think there's a real good chance you could take a big plan and you could still put that out there as long as you make sure that all of those little boxes are checked off before you as you do it.
yeah. There's some logic to it. I mean, the prior plan was basically a 10x from 60 billion, and the next plan could be an 8 to 10x to whatever 5 to 6 trillion. And there's some logic and there's some symmetry in putting them both out there. I agree.
All right. Well, and what do you think about the move to Texas? I think that it just sounds knee jerk. I think that when you decide where you're going to incorporate, there's so many different tax issues, so many different other kinds. There's a million issues that go into. I've had to make that decision a number of times in my life, and there's a bunch of issues. I think moving to Texas may be a great idea, but it needs to be a package of reasons to make that move.
Yeah, I agree. And one of the questions comes up is, if you stay in Delaware, are you subject to uh, more opportunities for this to occur? And is it going to go to the same, judge who's, you know, again, I'm not going to argue the merits of each case, but I mean, she's been involved in cases of about $100 billion of his money
Right.
and ruled not in favor of him in both times. Um, so the question is how long do you, as somebody who, is allocating that much capital out there, how long do you want to stay there? What's the next case?
Yeah. Yeah.
Uh, and how do you protect yourself? And it's not just a location change, and more in general, like how do you protect yourself?
Yeah.
So yeah, it could be more knee jerk, or hopefully somebody's kind of got the pros and cons of each one lined up, and there's some sort of merit scoring of the various options.
Well, speaking of government employees who have made some bad decisions in the last 24 hours, what did you think in general about Mr. Powell's decision, not his decision, the committee's decision, his speech or his press conference afterwards? How did you feel about all that?
Yeah, I'm not surprised that they held the rate. This is January. Looking at the December data, And I know there's some recent data that came in even today. I'm surprised that I'm not surprised that they held the rate today. I'm more surprised that he made that comment about March
Yeah.
when on one hand he says we're going to be data driven, and then on the other hand he says, it's in nobody's base case to do anything in March. I'm like, well, okay, that's interesting information, but I thought you were going to be data driven and take it meeting by meeting. Having responses like that, that really upset markets. It's not only just about upsetting markets. That may be the commentary, but I've often and always said when people ask me about this, um, they're going to be very hawkish or very bearish until the day that they decide that they're going to cut, and because they don't want the market working against them. They don't want to roll into March, with the 10-year down at 3.25% or something, and in the stock market, they say they don't care about the stock market, but
They do.
I don't know. Yeah. So anyway, I didn't think he had to say that comment. I'm not surprised that they held. Um, and I don't understand. I mean, he's got to be very clear on like the data and like what they're. I know it's a multivariant issue, but they really need to be clear because you have trueflation, below 2, which fine, they don't look, but they look at PCE, and the 3 and the 6 month rolling PCE, I think, are under
Two.
2.5% right now.
Under two.
So yeah. And so if they say they look at the PCE and the PCE is lower, let's see what this job print comes back at too. And there's some questioning of just the jobs data. Like, if you look at it state by state versus looking at the aggregate, and there's been a lot of revisions in that data, but yeah, these got to be clear, like what they're ultimately looking for. Cause it looks like inflation, there are multiple months in a row. Their question of is like, how sustained is this reduction in inflation? And the answer is it's multiple months in a row. It's a long period of time.
At least 6 or 7 months on the PCE. So it seemed to me, Jeff, maybe you noticed this, maybe you can comment on it. Up until the last meeting, the press was hawkish. Most of their questions were, don't you think you have to raise again? Are you sure you don't have to raise again?
Right.
They seem to be going along with the Fed in terms of being hawkish. I saw a sea change in the questions this time. It seemed like everybody was saying, are you kidding me? It needs to come down. Why aren't you coming down? You said you only needed 6 months in a row on the PCE, and now you're saying you can't even decide after 8 months? I thought that was the most important question of the entire call.
Yeah. Yeah. And it's interesting how they could all kind of move in that direction, pretty quickly. And there's all kinds of theories of like what kind of pressure does the Fed get? We're in an election year and so forth. But it's fascinating that they all moved, that quickly to cutting and like when are we going to cut? And then all the Fed funds futures. I mean, even today it went from the 40s to like almost 70% cutting in March. And there wasn't that much data to do that. But and then after the meeting, after his rhetoric, it went down, I think, into the 30s.
But did
So
you see what happened to the bonds? The bonds
yeah,
rallied.
yeah,
The
of
bonds,
course.
the what do you call it? The yields dropped like 12% during the regular hours, and then they're dropping another 3% in the after hours. So they're down to almost back down to to 3.9 again.
Yeah, they don't believe him.
They don't believe him. Yeah, they don't believe him. That's right. So, I'm a big productivity guy, right? I don't know if
Yeah.
we've talked, I don't know whether you and I have ever talked about that before, but I believe that during the craziness, and he seems to also, during the last 2 years, we've seen we saw, first of all, a dramatic drop in productivity, because who can spend time on becoming more productive when the number one thing on your plate is getting more people in the door? As long as they can pick up a hammer and know that what a nail is, you hire them, for putting up the drywall. So when you get past that craziness and things start to level out, as he said that they have, now your productivity might go like this, which it did. We had a giant spike in productivity in last quarter. The productivity numbers come out again tomorrow. He didn't seem to think that productivity was going to be that strong going forward. Did you catch that? I thought that was the silliest statement that he made.
Yeah, and I don't. You have to wonder how they're forecasting these things and what the inputs are. Part of it, I think he was saying, is that he believes that the assist from AI is going to take much longer than people think on the productivity side. But yeah, it would seem logical to me as the net ads come down and it's more leveled off, that you would have a greater focus on productivity. And quite frankly, with all of these companies cutting, I mean, major companies, just every other week you're hearing a big reduction. Those are all they're all focusing on productivity. How can I do more with less?
So I thought the headline that won't be the headline because it's a little too geekish. The headline of all the things Powell said was also on productivity. He said the reason we've been able to have this good economy and have inflation go down at the same time is because of productivity. That to me was the headline of the entire meeting.
Yeah. And on its face, I mean, I don't think any of us, if you started 2023 and said, well, look out to the end of the year, I don't think anybody had no recession. I think the GDP was revised again over 3.5% for Q4. It was 4.5%, 5% in Q3. I don't think anybody had that on their bingo card. So if you want to give the Fed credit for part of that, maybe they deserve credit. They can't just be whooping boys and girls for everything. But I don't think anybody had the some of the metrics of the economy, some of the underlying strength metrics where they are today in terms of employment staying low, in terms of employment staying high, unemployment staying low, and inflation dropping as it did. I don't think anybody had those two working together versus working against each other. So so you have to give them some credit, but I mean, inherently they have this reputation of starting too late and not not ending soon enough, and it feels like we're going to fall into that again.
He also mentioned, which I thought was important, I don't know whether anybody will pick up on it tomorrow in the headlines, but he said that anecdotally he's hearing from around the country that business is picking up in the first quarter in January. That is nobody's saying that. Everybody, in fact, I would have been predicting personally that we'd be continuing to see a slowdown. We were at 5% and then 3.3. Maybe next month it's 2 points, or maybe in the following. I mean, this quarter maybe it's around 2, and then maybe 1.5. He's saying it's picking up. That was a shocker.
Yeah, and I mean, these are general statements. I mean, I'd love for them to use tools and have something more analytical than just, we had some conversations with some companies. I'd rather there be a directory of, the top 1,000 companies or something that they could survey and get some real-time data on. But yeah, it's hard to comment.
So the last thing on the Powell speech to me was housing and rents. This represents, depending on who you're asking, 20% at least the economy, between the actual purchase or building and purchasing housing, the mortgages, all the stuff you put in the house, et cetera, et cetera. It's about 20% of the economy. And it's about 40, isn't it about 40% of the CPI? Something like that.
Yeah, somewhere between 33 and 40% of the CPI. Yeah.
CPI. He says, look, we know that rents are flat, maybe even down. And that's what the latest numbers are showing me. The rents are down. And he says, so that's going to come into the numbers eventually. And we know that housing, of course, is shockingly, the prices are going up. So the overall might be flat, might be up a little bit, but I don't think anything the Fed can do right now can help on the housing front. I don't know what they can do that's going to make more housing available in terms of keeping interest rates high.
Yeah, they would have to cut the rates pretty dramatically, and that's, what will these cuts look like in the future? I think is important. But I mean, they saw a pickup in housing even when the 30-year borrowing rate went from 8 to low 7s, high 6s. I think they saw a pretty big pickup and people ready to kind of stomach through it if there was a 6 handle in front of it. But yeah, I know a lot of the home stocks, really sold off after his rhetoric today.
Yeah.
So, but yeah, I mean, what they could do, I mean, first off, they can measure the right stuff. Right now they're still measuring what it would cost to rent your home,
Yes, right.
owner's equivalent rent. And there just have to be better metrics. There just have to be better metrics.
Have to be. So just a couple of things with Tesla. We got lithium miners indicating that lower profits. 2 lithium mining companies came out today, lower profits in 2024. So how bad is the lithium glut? How bad is the battery glut? And will Tesla be able to benefit at some level as the smaller companies are dropping these prices or will Tesla be kind of stuck because they're so big and their contracts have to be way out there and take into consideration, moving numbers and whatnot? I mean, what do you think? Do you think Tesla can get as much or more benefit as their competitors with regard to lithium and battery pricing?
Yeah, Tesla will get the most benefit actually. Um, if you look at, if you go through the concept of network latency, which is you buy material in, and how long does it take from, material inbound to product sold through to consumer, and you're relieved of that inventory. And if you look at the size of that network latency and you look at the speed at which, first off, they have supply chains in the regions that they do their battery production, except for Berlin. Obviously, they're fixing that. So they localize supply. That's the first thing you want to do in network latency is localize supply. I think Shanghai's got 95% of supply localized. So number one, they practice this thing of localizing supply. Number two, they practice this thing of they report out on the click rate in terms of like how many Model Ys roll off a line every 40 seconds. They report out on that, but really the what they're driving down is the total process time in the factory. And we believe, and there's data that says that they have the shortest process time end to end to build a vehicle. So now you localize your supply, you have the shortest time to build a vehicle, and now you have in channel, you have you don't have a dealer network, and you have the smallest in-channel inventory of any auto manufacturer on the planet.
Right.
You have 15 days, and sometimes anywhere from a third to half of those 15 days is just a vehicle leaving the Tesla factory and getting to a final destination. So in reality, in static inventory, they probably only have, 8 to 10 days. So it's, a week and a half. So if you look at that, the size of that whole chain, is it 30 days? Is it 40 days? It's somewhere in that area. But for someone like a GM or a Ford or anybody else, any other EV manufacturer, you're talking 7, 8, 9 months when you look at their inventory and you look at their whole length of their supply chain. So if Tesla's doing that in a month, maybe a little bit longer, and then these other folks are doing it in 8 or 9 months, well, if there's a change that's going to occur on inbound pricing, or if there's a need to step in and renegotiate your contract, they're going to move that material through faster than anybody. And suppliers like that, so they'll actually want to negotiate and work with you, and they probably buy the most between their mega pack business and their auto fact. I don't think there's anybody that's actually buying more than Tesla at this point. So if you couple all those two things together, they have the contractual leverage to get the best contract. They have the leverage to get in front of the line on pricing changes, and they are moving. If we're in a deflationary pricing environment, they are moving the highest priced raw materials out faster than anybody out there. So if you put all those factors together, they're going to take great advantage of it.
So we'll get into the weeds here just a little bit. So the largest thing that I ever bought when I had my factory was train loads of plastic. And sometimes I would put in a contract 6 months for 6 months of these train loads. And so I would know my price for the entire 6 months. And then if there was a lot of activity going on in the world that the prices might go up or down, we might have certain kind of escalators or de-escalators based on prices going up or down in the spot market. Well, then sometimes I would be in the middle of that and I think, why, I wish I was buying on the spot market today. And other times I'd be thrilled that I had these long-term contracts. obviously when the price is going down crazy like this, you were hoping you're on the spot market. However, I could pick up the phone and call my salesman or my broker, or sometimes they would pick up the phone and call me in the middle of the contract, even though it was to their disadvantage, to renegotiate that long-term contract because they wanted the long-term relationship. Does that happen at the levels that you operate at?
Yeah, absolutely. Yeah, they want the longer term business. They want the certainty. There are, Tesla's dual sourced and triple sourced on almost every part it possibly can in the product, obviously outside of the inference computer and so forth. And having that multi-sourced relationship gives them that leverage. And those suppliers want certainty. They want to go to their boards and say, look, I've got a 3-year deal with Tesla. It's straight up PO terms for the first year. It's take or pay the second year. And they want to be able to go and have that certainty, and they'll pay for that certainty. You pay for that certainty and exclusivity when you have an upstream partner like a Tesla that's constantly growing volume. You won't pay for that exclusivity if you have somebody you're dealing with, Ford or whatever. They don't have no idea. They're off orders of magnitude in terms of what they plan for capacity versus what they ship. Those are red X's for suppliers. That's the worst thing for a supplier, is to be taking on the inventory, to be taking on the excess and obsolescence, to be installing the fixed capital and not being able to use it, to be bringing in labor and not be able to use it. It's death. You could kill a supplier doing that. And I'm sure many suppliers have been killed as such. So yes, that's important to suppliers, that long-term relationship, and they will give, especially if you're a Tesla and consistently growing volumes.
All right. So speaking of batteries, we have a breaking news right now. Reuters is reporting that Tesla is expanding its battery facility in Sparks, Nevada, to bring the supply chain for cheaper lithium iron phosphate batteries, LFP, to the United States, according to Bloomberg News. The electric automaker will buy idle equipment from CATL, the Post said, adding that the plant will have an initial capacity of about 10 gigawatt hours. Tesla and the Nevada Economic Development Bureau did not immediately respond to questions. And the move comes as regulation in the United States curtails companies from depending on countries such as China to source materials used in batteries. This year, Tesla's cheapest car, the Model 3 compact sedan, lost tax credit for the purchase of EVs under the Inflation Reduction Act as new regulations on sourcing of battery materials kicked in. And then Sawyer Merritt adds this on Bloomberg. Tesla will have full control of the facility, cover 100% of the cost, be 100% their personnel, except for the CATL personnel who will be involved to help set up the equipment. The plant, which will make cells for Tesla's large battery megapack product, is part of the broader effort to onshore the supply chain for lithium iron phosphate cells in America. Tesla also sees the equipment purchase arrangement as a cost-effective way to set up new facilities. A lot to unpack there. Had you seen this before?
Yeah.
Okay.
And I've done these kind of deals before too. And they're all different, but in essence, this looks like stranded capex that they're able to get for, some percent on the dollar. And, Tesla wants to focus on, ramping their, solution, their 4680 solution, and they're going to use partners. But, for the low end, it says in their master plan 3 that they're going to use a lot of LFP. It works from a cost structure perspective. So I would imagine that there are partners in the United States that ordered a bunch of capex and did a partnership with CATL, and they have since taken their demand down. And Tesla is keenly aware of this and said, well, instead of creating this stuff back up and trying to get it, exported again and to deal with all the taxes, all the implications, all the paperwork, or instead of waiting for, person X, Y, and Z, knowing that you could just build new capex and help them if they figure out what the hell they want to buy later. We're Tesla, our demand's growing. We'll take it from you now, but we're not paying full price for any of this. And it's a great deal for Tesla. it's probably a good deal for CATL versus having this capex stranded doing nothing. So I think there's winners on both sides. I think Tesla focuses on win-win from a procurement strategy perspective, and that's how I think the deal is. By the way, I would be surprised if they're not going to use some of this capacity for the Model 3, but let's
Well,
see how that goes.
that
They're
was
constrained. They're already constrained on 2170s. Why wouldn't you
yeah.
use this if it's Tesla production? You get the IRA tax credit. Why wouldn't you do it?
Well, you get it if it goes into the batteries also. So it does. I mean, if it goes into the mega packs, either way, you
Correct.
get that benefit. But I was thinking that it might help the consumer because that's a $7,500 credit. But we're looking at with 10 megabytes, I'm sorry, gigabytes of activity here. You're looking at $450 million of income just from the IRA on this.
Yeah. Yeah. No, it's a big deal once ramped up. So it's great to see these moves. They get overlooked too much. I think after hours flipped when this came out, but in general, it gets overlooked. Tesla is meaningfully adding capacity in North America, and everybody's on pause or pulling back. And they're going to see growth. There's no question in my mind that they're going to ship somewhere on the order of 20 to 25% more vehicles in the United States this year. And they're going to soak up what those others are incapable of doing.
Yeah, me too. I couldn't agree with you more. All right. So as you mentioned, what happened in the after hours after this news broke? Well, not a lot either way. It's up Tesla's up 99 cents in the after hours. So of course, we're moving back towards we're the 430 down in the regular market. So a fourth of that now almost recovered. So that's good news. Let's see. And who knows if we've got that trend line looking at tonight, maybe it carries forward into the morrow. But I think the most important thing right now on this particular day is, of course, the bonds. And so what we've got going on with the bonds is we have got what's happened here. Here we go. Oh my goodness. I don't know how that happened, and I'm sorry, folks, for this looks still like Canadian. Here we go. Maybe somehow I've got all kinds of other people's bonds in here. I don't know how to read this. Oh no, how am I going to do this? US 6-month. There's US 6-month. I don't know how to fix this. US 5-year. We're getting there. How did I get all these other countries? Oh, this is ridiculous. I cannot find the 10-year. Anyway, let me back out of this because it shows the 10-year at least. My ears are turning red with embarrassment here, Jeff.
Yeah, I'm trying to pull it up. I think I can pull it up here.
All right. I don't know why it was pulling up everybody's.
Yeah, I see the 10-year at 3937.
And what about the 2-year?
Pull them all up. The 2-year is at 4.235.
So about 33 basis points. So because a few minutes ago it was like, so what's it showing? How much is it down in the pre-market? The 2-year?
I had the 2-year basically flat. It says it's up 0.006.
Okay.
I see the 10-year down 0.028, so it's meaningful.
Yeah. Okay. So now it's the inversion is pulling out again. That's what I was kind of looking for. All right. So yeah. So this is 3.937. I mean, it's a huge drop for a single day in the yield. We'll see. I would expect that to continue tomorrow, quite frankly. But who am I? This is not investment advice. However, I did say the other day, wasn't investment advice either, but I said at 4.2 or whatever it was, unsustainable. So I get credit for that one, Jeff.
Yeah, for sure.
Okay, so we've got the oil price basically flat in the after hours, or the pre-market again, and it seems like there's a little bit of peace breaking out. Not 100%, but seems like the Iranian surrogates have all said, we'll back off for a minute. There's something going on with the Israel making some kind of a peace overture, at least for a treaty, for a temporary. So maybe that's why oil is dropping at this point.
You can only hope.
We can only hope. Okay, we got gold up again. I'm sorry. This is I keep doing this, Jeff. I don't know why. It must be. Did you know that I have that terminal illness? AGE? Yeah. Yeah.
Oh,
and sometimes it affects my brain. I don't know. Anyway, the gold is down $10 in the pre-market. So that's kind of interesting. Copper is down 0.32%. So that is interesting. But now that's partially because the dollar is up on the interest rate news. So the Dow Jones Industrial is looking at 35 up. S&P futures 750 up, NASDAQ futures 4450 up. What did you think about how the Magnificent Seven got slammed today? I mean,
the growth in I would say non-Tesla infrastructure, non-Tesla, non-Nvidia in the max, the growth is pretty underwhelming. Some slight beats on the top and bottom line. But yeah, they were punished for, some of the sub-metrics in their earnings. Google doesn't guide, Microsoft's guidance, wasn't, a lot of words, I think one of the analysts said that it was like the greatest conference call they ever heard.
Wow.
But when I go looked at the last 3 years of revenue growth, it's, it's single digits. So, but yeah, they're definitely working on profitability. But in general, the first two are not received well. Tomorrow's a big day. I think it's Apple, Amazon, Meta.
Apple's next week.
Oh, yeah. So you have Meta then and Amazon. For some reason, somebody said Apple was tomorrow, but yeah, maybe they're usually a week out.
Right.
So, we'll have to see how those fare. I mean, and they were all pretty strong coming into the print too. And that's what was kind of counterintuitive with Tesla for me, is like they weren't strong. I mean, they missed the top and bottom line, but not in a meaningful way. Everybody was looking at gross margins. Gross margins were sequentially better. But you couple that with not guiding when they normally guide, that's where it took some punishment, but it looks like it's stabilized here.
It does look like it's stabilized, and well, it should be, because we saw the robot walking around today looking really human-like.
Yeah, that was very fluid motion, and be interested to know if that was, again, remote controlled, or is it, getting more end-to-end usage out of the lower limbs now? That would be interesting to know. So yeah, it's exciting. So you see Elon, leaving Austin, going to the Bay Area. It used to be to go work at Twitter, which I'm sure he went, and he's done, he flies back and forth between them. It's probably a half-hour drive. But I think he's spending a lot more time on Optimus and FSD when he's out in the Bay Area, because I recognize that room. That looks like the room that they did AI Day in on the HP campus, and they bought a lot of new square footage on that campus too pretty recently. So yeah, they've got a lot of room for development there.
All right. Any last thoughts for the day, Jeff? Anything we should be looking for that I haven't brought up, or things that
just to see if this, this Fed sell-off, is it 3 days? Is it 1 day? Is this the start of, a broader sell-off? Is it February is seasonally not good, but usually the first couple of weeks are okay, up until President's Day. So it'll be interesting to see if this is, 3 days, or is it, is this a bull trap in the after hours where everything's kind of back up again? I think that's the thing to kind of watch for. Is there follow through on this? And, and then what happens with Elon's, compensation, and when will this play? How soon is this, can this all play out by the second quarter?
Yeah. All right. Well, as always, again, Jeff, I think we brought good news. I think at least we brought a good news version of the bad news. I'm not sure if that's our job or not, but
just be data driven. Yeah.
Thanks again for joining me as usual on Wednesday. And to all of you out there, it has been great talking to you.